Okay, for once, I think I am live and I haven't had any technical difficulties. So I'm just gonna wait for a couple of people to join in. Hope you are all doing well. I'm a little bit tired actually today because today's been a long day, guys. Like, I've just got home about half an hour ago. So I was like, yeah, I need to quickly have a tea, freshen up, and get back here to make sure that I was live for 7:30. So yeah, I've made it, which is great, and just wanted to say hello. Yes, got a couple of people joining in. Hi, Integrated Purgatory. Hope you're doing well. Yeah, I literally just got home half an hour ago, so if I'm a little bit flustered or tired, I'm so sorry. But I was like literally rushing home just to make sure I got to this live all okay. Hey Jay, hope you're doing well. So let me just get started because I see a few people are joining me now. So today we are going to be talking about investing. I'm great, thanks. Integrated Poker Tree. Literally, yeah. Today was like I went to church first this morning, and it was quite a long service just because it's the end of the month, and then we also had a family do later on, and literally that was like on the other side of London. So I literally just got back. We were like driving back to try and make sure we get here on time. So yeah, I know. End of January already. Like January is basically done, guys, until tomorrow. Like I know sometimes January isn't everyone's favorite month of the year. It's my birthday month, so I can't complain too much. But yeah, no, it's luckily like the end of the month is here. Who got paid? Let me know. Did you get paid? Have you got paid already? Set your February budget. Has your February budget been set? Let me know. Hi, Nasilla. I hope I spelt that right. Hi, Nasilla. I don't think I've seen you on these lives before, actually. So if this is the first time, welcome. Let me know. Or maybe it's the first time you're commenting, because I know some of you guys can be silent lurkers. Well, it's okay. It's okay. I know you see me in spirit. But yeah, today essentially what we're going to be doing is talking about investing, which I am looking forward to. So, guys, if you do have any questions, please do let me know. Please do also remember that I'm not a financial advisor, so I don't give financial advice. What I do is I give financial education, which is very different. I will never ever tell you what to invest in. I don't even tell my clients what to invest in. What I do is just give them the tools and the education to understand it so that they can make their own decisions, because essentially that's what I've been able to do as well. So just wanted to make sure I got that disclaimer out there, specifically when I'm talking about investing as well. Yay, good. It's the first time you've caught it live. Well, welcome, welcome. Hope you're going to enjoy this session. Yeah, February budget is already done. Glad to hear. My February budget is done and it's filmed actually. So that's going to be coming out on Tuesday. So if you want to see what our budget is like on Tuesday, then make sure, you know what to do. Like, you'll see my video on my channel. But let's talk about investing, because I think that's always like quite a daunting topic for quite a few people. And as mentioned, if you've got any questions, please do let me know. Don't hesitate to contact me. But again, I can't give you like financial advice, so I can't tell you what stock to invest in. If that's one of your questions, hopefully it's not. But feel free to ask me any questions. There is never a stupid question, by the way. As people always say, there's never a stupid question, particularly when it comes to investing. I think because sometimes it can feel like a whole new world, people are maybe scared to ask questions around investing. But yeah, hopefully you guys have seen what I'm like. I like to keep things simple, so I'm not going to be using I'm going to not use like complicated terminology. But if there's anything that maybe doesn't make sense, just let me know, and I can of course explain that in a bit more detail. And as always as well, if you do need further support when it comes to investing or creating a financial plan or budgeting or saving, I do offer one-to-one coaching as well. So make sure you do check the link in the description if you feel like you need further help there. But in terms of investing, we can get started. So we're specifically talking about investing, what I like to basically think about is, when it comes to investing, I'm basically expecting some type of return back. So I could either invest some time or I could invest money. So when I'm investing time into something, I'm going to be expecting some type of return back. It may not be monetary, but there's going to be something that I expect to get back. So for example, like my YouTube channel, for example, I have still been investing a lot of time into that, but expecting that in the future I will get some type of return back, whether that's growing a community or a business or um, you know, ad revenue, whatever it is, but you're expecting something back. The same thing if you like join courses and programs, like you're expecting some type of return back. So it's important to know that like when it comes to investing, there's a whole load of different things that you can do. You can of course invest in different asset classes, and we call them asset classes like the stock market, there's real estate, which is like property in our terms. There are also some things called commodities, so you can invest through that, which is what a lot of people do. But you can also do investments where you're like growing your own business, for example, or you're investing in yourself. So there are kind of like different ways that you can basically invest money or your time. So what I want to just talk about firstly is just some of the mistakes that I kind of see when it comes to investing, and where I feel like people maybe misunderstand or maybe just go a bit wrong. So the first thing I just kind of wanted to mention, and this is something that I just kind of want to get out the way, but people investing without having their financial house in order. This one is always an interesting one because either I have questions like, oh yeah, I really want to start investing, but then like if you have credit card debt and you're paying like double digit interest rates, it's very difficult for you now to think. It can be difficult to start going straight into investing when you haven't actually set your financial foundation in order. And this will go back to like the first live that I did. So if you didn't watch my first live, I think I have it linked in the description below, where I'm talking about setting the financial foundation. I see many people running before they walk. And in that first live, I spoke about people, trying to make a lot of money, but then not actually managing the money well. But here I'm specifically talking about investing. So if you don't currently have savings, or you currently have a lot of high interest debt, it may not make sense to go and start pouring all your money into investments. And the reason being is because, number one, from a mathematical perspective, so from a logical perspective, particularly if you're paying high interest rates. So I'm talking about, I probably say like 6% or higher, to be honest. If you're paying high interest rates, you aren't always guaranteed the return when it comes to investing. And specifically here, I'm going to use the stock market as an example because most of us probably know about investing in the stock market. A lot of people do invest in the stock market. And so when it comes to that, especially investing in the stock market, you're not always guaranteed your returns. And so for me, when I'm thinking about investing in the stock market, it's going to be very much long term. So if I'm not guaranteed returns like in the next year or 2 years, but I'm paying 15% credit card interest, where I might make 15% in the stock market, but I may not. I might end up not decide, but I may end up making, -5%, which can happen. Or I could end up making 2%. Like, your returns aren't guaranteed. And so if you're busy paying 15% to your credit card company and you're only getting a 2% in the stock market, well, then logically it doesn't make sense, because you're paying more to the credit card company than you're actually getting a return for yourself from your own money. And so it's really important to make sure that like you have your financial house in order, because if you now start trying to invest, but you're paying all of this money to the credit card company, there's going to be no point. Like, mathematically, there's no point. And so we always have to be careful when we're talking about, yes, like investing is important. And I'm going to talk about why investing is important. But it's really important to also know where you're currently at as well, particularly when it comes to your own finances. And I think that's something that a lot of us tend to miss. We kind of feel like, oh my gosh, I need to invest because everyone's telling me to invest. But like, there's a time and place to start doing it. You want to make sure you have a set foundation. The other thing that I keep seeing as well is like, if you don't have savings, like if you don't have cash, the reason why like a lot of people end up losing out, and they actually end up losing money, is because a lot of people will start investing all of their money and they won't have any cash to back them up. And so again, when it comes to investing, your returns aren't always guaranteed. Yes, in the long term, like most likely they could be guaranteed, but they're not 100% guaranteed. And so what you need to think about is, if something happened to your income today, like if your income drastically changed, no matter whether you're at a 9-to-5 job or maybe, you're self-employed, whatever it is, if your income completely change today, and let's say that you're not going to be getting any income for the next 3 months, if you do not have cash, so for example, if you didn't have an emergency fund, where would you get the money? How would you then pay for those expenses? Well, number one is you're either going to use debt, so you may have to go into credit card debt, or maybe take out a loan to pay for your expenses, to pay for your rent, your mortgage, your utility bills, whatever. Or number two, if you've now invested all of that money, what you might end up doing is now thinking, oh, now I have to sell my investments because I don't have money to pay for all of these bills. And so what can happen is that because you're now going to sell your investments at a time where you didn't plan to sell your investments, you have no idea what the market is going to be like. Because again, with a lot of people, I don't think they realize that the stock market does not just always go up. Like, there can be a lot of swings. And even now at the moment, like, people are seeing their investments going down and they're worried and they're just very confused. So, you know, investments they don't always go up. They're not, you're not always going to get your 10%, your 15%, 20% returns. It doesn't always happen like that. So if there comes to a time where your income is changed and you don't have money to pay bills and you now have to sell your investments, what happens if the market's gone down? Then you're going to have to sell at a loss. So let's say you invested £1,000 or dollars, and that's how much you have in your portfolio, but all of a sudden markets have gone down and you only have 800 in your portfolio. Well, if you don't have money, you're going to have to sell. So you end up selling at a loss. So it's really important to make sure you set that foundation first before you now start thinking, okay, now I'm going to start investing. And it's not to say, by the way, that if you're in debt that you can't learn about investing, because I still learned about investing when I was still paying off my debt. The reason why I did that is because I knew that as soon as I paid off my debt, as soon as I got my emergency fund and I had cash, you know, put away for other savings, as soon as I had that, I knew I was going to start investing. And so I didn't want to delay anymore. So what I did was, even whilst I was in debt, it didn't stop me from investing. So, you know, even if you're in debt or you haven't maybe built up like your emergency fund yet, it doesn't stop you. It doesn't need to stop you from learning how to invest. So I just want to put that out there. But it's the money that you actually put towards your investments that may be delayed a little bit. Have you heard of pinfold? No, I've not heard of pinfold. What is that? Let me know, because I've never heard of pinfold. Yeah, and investing doesn't always mean fast money. Yeah, because here's the thing: like a lot of us feel like investing. Okay, there's a very big difference between trading and investing as well. That's something that I want to point out, because I think, because someone came to me and saying like, oh yeah, I really want to learn like all of this investing and trading, because like trading 212, because that's a platform. That's a platform that I use, for example. I don't trade. I'm not a trader. I am an investor. And what I mean by that is I don't look for short-term gains. I'm not looking to sell my investments within the next month or even within the next year. For me, when it comes to investing, it's very much long-term. And when I'm talking about long-term, I'm talking about probably more than 5 to 10 years. That's what I mean by long-term. Now, there may be a time where I decide to sell some of my investments because maybe an investment isn't working for me, or maybe I've invested in a particular company and I just don't really see it going anywhere. Then there may be times where I decide to sell, but mostly for like the majority of my portfolio or what I invest in is pretty much for the long term. And I'm talking years. A lot of you guys think long term is 6 months. That's not long term. It's not long term. If you're looking to invest for 6 months, that like, for me, it's just not something I would do, to be honest. And that's why it's always important to understand like what your goals are. And that's why every time like I go to my clients, before you even start investing, you need to get clear on your goals, because what you think you should be investing, really and truly, you may probably need to just be saving that money. Like, if you really need to think about it, because when it comes to investing, particularly if you're investing in certain things like real estate or the stock market or whatever it is, if you're investing in certain things like that, you're not always guaranteed those returns, and there are always most likely going to be short-term swings, and you don't know when those short-term swings are going to be. So it's really important that you understand, like, if you're trying to make a quick buck, like, there's a difference. Like, trading is very, very short-term, and so the risk is there, and then potentially you can get rewards, but it's probably going to be slightly higher risk. particularly because it is in the short, because it is very short term, whereas investing is very long term. So a lot of people will have short term dips, but over the long term, most likely they will see returns depending on how they have invested their money. So it's really like important as well. Like if you're looking for a quick buck, then I'm not the person to come and tell you what to do, because yeah, for me, investing, I don't see investing like that. Most people, when they invest their money, it's pretty much for the long term. So that's really, really important. Yeah, the Reddit versus Wall Street fiasco doesn't help either. No. I mean, to be fair, like I don't tend to look at that stuff. Like even where there was like the GameStop fiasco and all of that, I had a look because I wanted to understand like what people's mindsets were like. And it comes back to that kind of behavior element where people really want to make money very, very quickly. So I always find it quite interesting because, yes, a lot of people can make money quickly, but a lot of people can lose money quickly. And a lot of people did lose a lot of money from trying to get rich quick. And so for me, I kind of just, I will like see what's happening, but I will, you know, I'm just not really a part of that. But it's always an interesting, thing. It's a self-employed pension, so you can put money in every month and change the amount that goes in. Oh right, okay. So is that maybe like a platform that you can use? Because usually with pensions, at least in the UK, it will be under a SIP, so self-invested personal pension. So I wonder if Pinfold's a platform that you're talking about. But yeah, so when I'm talking about investing, just make sure you have your financial house in order. Don't be looking for like fast, rich, quick schemes, because you'll probably be disappointed. I'm not going to lie. And so moving on now, the other kind of mistake I kind of see is people kind of investing without a strategy, and they're kind of just investing for the sake of it because they just know, like, oh yeah, people are telling them to just start investing and they just want to start investing their money. And so it's really also important to be very aware of your own goals. And that's why I keep coming back to the fact that investing really and truly should be long term. If you are looking to become like an investor, and I'm talking about things like the stock market or like real estate, when you're looking at property, that's probably going to be more so for the long term for most people. Again, there's going to be a difference between trading and investing. But when you're now thinking about investing, you really need to be very clear on your strategy. And what I mean by that is, how are you actually going to be investing? Let's say you're investing in the stock market. And so when you're investing in the stock market, you want to figure out what is going to be the best way for you to invest your money whilst you can actually reach your financial goals. So for example, with many people, it could be actually investing with individual companies, and maybe they have a more like an active approach. So they might be looking for income now. So maybe they're looking to invest in companies where they basically give them income. They kind of call them dividends. It may be that you're looking for a company to kind of get income now, and that's your strategy. Whereas another person, it could be that they are looking to invest through companies that are really, like, they call them growth companies. So these are companies that are like kind of growing, and they're basically reinvesting all of their profits so that they can grow even quicker. So these are going to be things like Uber, for example. So these are companies that are pretty much growing, and they're probably not going to be just, you know, giving out cash to people who own them, their shareholders. And so it's really important to understand what your strategy is so that you can be able to stay the course. Many people don't know what their strategy is. Like if I ask you, like, okay, you're investing in the stock market, what's your strategy? Many people will not be able to answer that question. The same thing is when I'm asking them, you know, okay, well, what's your risk tolerance like? Many people will not be able to answer that question, but they're still investing without realizing what their risk tolerance is like. And when I'm talking about risk tolerance, essentially what I'm talking about are, how comfortable are you at taking certain risks? And if certain things happened to your investments, how comfortable will you be to stay the course? Many people do not know this, and it's actually really important, because if you're the type of person who is probably slightly more cautious, and particularly because my clients are women, with them, they tend to be slightly more cautious, I would say, and less likely to maybe take a lot of risk. That is going to impact what you actually invest in. Because if you're a very cautious investor, but you've decided that you're going to pile all your money into Bitcoin, for example, well, then it's going to defeat the purpose, because Bitcoin, for example, is very, very volatile. So Bitcoin is something that it may not be amazing for you, or at least piling all of your money into it if you are a cautious investor, because it's very volatile. One minute it could be up by like 50%, the next it could be down by like 80, for all we know. And so it's really important for you to understand, okay, well, what am I comfortable with? What kind of things am I comfortable with? That is going to help you understand what kind of things you would want to invest in. So I'm hoping this kind of makes sense. I'm hoping it's not, if it doesn't make sense, please do let me know. Or if you need me to explain things in a bit more detail. And yeah, if you've got questions as well, let me know as well. But when it comes to things like your risk tolerance, again, this is something that's going to be really important, because you need to understand what are you comfortable with. Again, when it comes to investing in, even in real estate as well, when I'm talking about property, all of these markets, they're not always going to go up forever. Like if you look at the housing crash in 2008, house prices did not go up forever. Like they crashed. So you need to be aware of that, and you need to understand, okay, well, how much risk can I take? Would I mind if my investments dipped? Like a lot of people now, they're crying over their investments because their investments have, dropped in value, or it's like dropped by like maybe 5 or 10%. And the reason why they're crying is because they haven't actually understood what their risk tolerance is like. They have not done the work to think about, okay, well, what am I comfortable with? Because when my investments dropped, I didn't bat an eyelid. I was like, well, the fundamentals are still there, so right, I'm going to keep investing. In fact, I was even hoping that I had some money so that I can invest even more. But that's because I understand, not only do I understand how investing works, but I also understand my risk tolerance as well. So you really need to be like very clear with like, okay, well, what am I comfortable with investing in? Or what's comfortable for me? Like, what's my risk? If my investments dropped by 10%, how would I feel? That's kind of what you want to be asking yourself. Hi, greatest. How are you? Hope you're having a good time. If you've got any questions, please do let me know. So let's talk about, I guess, investing in the stock market, because that's kind of what I tend to focus on investing in the stock market, not only on my channel, but in my program as well, just because it's probably one of the easiest ways that you can start with, like property. I have a really, really big interest in property. So it's something that I definitely want to go into. I'm currently saving up for it. But with that, depending on how you're investing, you need a lot of cash, right? So even if you're getting a mortgage, you need to basically pay a deposit. And so not everyone's going to have that amount of cash. I mean, we don't even have that amount of cash at the moment. So I always kind of say, like, if you're looking to get started with investing, and again, you've got your financial house in order, then the stock market is a really easy place to be. But I always say, like, the stock market's not the only thing that you can invest in. Again, like as I mentioned earlier on this video, you can invest in your business, you can invest in other businesses, commodities, like there's a lot of things that you can invest in. But the stock market is quite a good one, just for me personally, just because you don't need to have a lot of money to get started with investing. So it's something that a lot of people prefer doing. Yeah, I'm great, thank you. I'm a little bit tired today, just because Sunday's been a bit of a busy day. But yeah, I'm gonna rest after this. Gonna have some dinner and rest. So I've just lost my train of thought now. What was I talking about? You can tell I'm tired now. I think, yeah, I was talking about, as long as you have your financial house in order, and I was talking about the stock market. Yeah. So the stock market for me is like a good place to start if you maybe don't have a lot of money and you kind of want to dip your toes in investing. As long as you have your financial house in order, I think that investing in the stock market can be really, really useful. Hi, Riaz. I hope I said your name right. Let me know if I didn't. But hi, Riaz. Hope you're doing well. So yeah, when it comes to the stock market, I mean, if you guys have any questions as well when it comes to investing in the stock market, please do let me know, because I can try and explain it or answer your questions. Again, like if you've got specific questions like what should I invest in, I'm not going to be able to tell you, mainly because actually, not even the financial advisor bit, but because I don't know your goals. I don't know your risk tolerance. So it's very hard for me to tell you, oh yeah, you should invest in this, because I don't know anything. I don't know what your goals are. So it's really important, again, to make sure that you're very clear on your goals. But when it comes to investing in the stock market, one thing that I tend to see is this has probably been quite a big thing that we've been maybe seeing, which is great because at least we're now having a bit more awareness of the stock market. Hi, Marie. Hope you're doing well. How's your Sunday going? Let me know. But when it comes to the stock market, again, we're having a lot more awareness, which is good because it means that more people are investing. But the problem that I see is that people even necessarily don't know what they're investing for. So they're kind of just putting their money into investments because people are just saying that they have these investments and they're thinking, okay, well, that's the way to make money. Or what they're doing is that they are copying someone else's portfolio. So they are copying someone's, just seeing someone's investments and then they're just copying them. And that's why, actually, I will be honest with you guys, I'm always very, very hesitant to do a portfolio video on my YouTube channel because I don't want you guys copying my portfolios. I do not want you copying I don't show my portfolios to say, yep, invest in this. Because again, I don't know. We have very different goals. Like we have different goals. We have very different attitudes to risk. So you just copying my portfolio is probably not going to work for you because if your portfolio, if your investments now drop by 20% and you're now like, oh my gosh, my investments have dropped by 20%, I'm going to sell them now, I just need to sell them now, and then you obviously lose money, you're now going to come to me and be like, Veronia, I just lost money on this. Well, it's going to be because you haven't assessed your risk tolerance. So again, that's why it's very important for you to now understand your own risk, you to understand your own goals, so that you can make the decisions. None of my clients have the same portfolio as me. They all have different portfolios. And I'm talking about people who've never invested in the stock market before. When they started, they have all totally different portfolios because it's based on their goals and their own risk tolerances. Many of my clients have different risk tolerances. They have different goals. Yeah, they have very different long-term goals. And so it's important to be aware of that. So you copied in my portfolio, not knowing why I've actually invested in something. Because yes, I will talk about like I'm investing in this, and maybe I've spoken some about like some of the reasons why, but you don't truly understand why I've maybe invested in a particular stock or a particular fund, for example. And so if you don't know that and you're just blindly doing it because I'm doing it, well, it's not going to necessarily make any sense because you don't know what I plan to do with that. For all you know, I could be planning to sell it in like the next few months, for example, or maybe I could be planning to sell it in the next year. And I'm trying to be very transparent with you guys because I know, because some people may not be talking about this, but the reason why I'm trying to be so transparent is because I don't want you, seeing my portfolios and saying, oh, well, I've got to have it like Auntie B's. Because that's not the point. The reason why I do those videos is because I want to basically kind of show you guys as an inspiration for you guys to see, okay, well, if Veronia can start investing, well, this is something that I can potentially start doing as well. It's not for you to follow, like literally follow my portfolio to the T and just start copying everything I'm investing in. So I really want to make sure that that's okay. Yeah. Veronia, I never understand the best platforms to use. I personally don't understand how they work. I want to invest in a few at a time. So this is another question I tend to get a lot. Like I tend to get, okay, what platform should I use? It's very difficult for me to tell you what platform to use if I don't know your goals and your strategy. So that's why, like, the questions that like sometimes I get, that's not it's a lot easier for you to understand what platform you need to use once you understand like the core fundamental area of actually understanding, okay, well, what am I actually investing for? What kind of strategy am I going to have? And how is that now going to impact what platform I use? So when I'm talking about platforms, this is basically they kind of like, they call them brokers as well, but it's basically who are you going to be giving your money to. So if you want to invest in the stock market, you're going to need to invest through a broker, through a platform. Yeah. So if I wanted to invest in Apple, for example, I can't just go to the Apple store and be like, hey, Like, I wanna get a share. Can I invest in you? I can't do that, right? So if I want to invest in either companies or funds, and when I'm talking about funds, actually, it's worth me talking about it because all of this I'm talking about is basically the stock market. When I'm talking about funds, I am basically talking about a basket of companies. So it's not just one individual company. So it's not me like investing in Apple or Microsoft or Google. It's me investing in a basket of companies. So there may be like thousands of companies literally in one basket. And basically, I will own a small piece of all of those companies, as well as they call them shareholders. So if I like basically own something, I'm a shareholder. So as well as other people, they all will basically hold a small piece of the pie, basically. And so they will all own a small piece of those companies. So that's like investing in funds. You can also invest in individual companies as well. So like again, Apple, Apple, Google, McDonald's, whatever it is. And so when I'm talking about platforms or brokerages, it's basically who you're going to be giving your money to. So like, how do you plan to invest? You're like using that platform to basically invest that money. So there are loads of different platforms. So, big ones will include things like Vanguard is a big one. Fidelity is also a big one. Trading 212, if you're particularly if you're in like European countries, Trading 212 is also a new one. FREETRADE as well. So those are two platforms that I currently use. And there's loads of different ones in the US. Robinhood is quite big. M1 Finance is quite big as well. So there are loads of different platforms. But in order for you to pick your platform, you need to be very clear on your strategy first, because there is going to be certain things that you want to look out for based on your strategy. So for example, you may partly only just want to invest in funds. So if you're only investing in funds, well, there are some platforms that literally will allow you to just basically invest in funds and then that's it. Whereas if you want to invest in individual companies, there are going to be platforms that allow you to invest in individual companies, and there are some platforms that don't. So for example, with Vanguard, you can't invest in individual companies through Vanguard. You can only invest in their funds. So again, because you know your strategy and what you're focusing on, Vanguard might be something you're interested, or it might not be something you're interested in if you're now choosing to invest in individual companies. So again, like the question about which platform you use, it becomes a bit easier once you've actually sorted out the top bit in terms of, okay, why am I investing? What am I investing for? And how is my, what's my strategy going to be? And you get your strategy based on your goals. This is how I do it, basically. This is basically how I've worked through it, because I don't think people explain it very well. But your strategy is helped when you figure out what your goals are and what your attitude to risk is. That kind of helps you formulate your strategy, basically. So I hope that makes sense. But again, yeah, there are so many different platforms. It will just depend on what you're currently looking for and how you're looking to invest as well. So that's why, like, before like people start scrambling about like, oh, what platform should I use, really get clear on how you're actually going to be investing, particularly in the stock market. Get clear on that first, so that you can now think about, okay, well, based on this is basically what I'm looking for when it comes to my platform. Good, glad that it makes sense. So yeah, so again, like, yeah, I think I've like mentioned, just really think about your own goals, and this is why like your goals are going to be so important as well. And this is where people, I think, miss. They just like start investing, and then like, I've had like some of my clients, like some of them when they first start, they're like, yeah, I started investing, but I have no idea what I've invested in and why I've done it. And like this is like one of the biggest things I see, because I'm like, if you don't know what you're currently investing in, don't bother investing. For me, I mean, I can't tell you what to do with your money, but I would not bother investing, because if you don't understand it, well, then what's the point? Because if things now start to change and you don't understand it, the same thing with like a lot of people will start investing in individual companies, but they haven't actually done the research to understand whether that's actually a good company to invest in. So with individual companies, let's say you want to invest in like Apple or Microsoft or Google or Lululemon or whatever it is, you need to be able to understand what that company actually is doing. And I'm not talking about like the types of products that they're selling, but I'm talking about, you need to understand their financials. So you need to be understanding whether they're profitable or not. You need to understand whether they have assets or liabilities. So are they in a lot of debt, or do they have a lot of assets? Do they have good assets within their company? Or what's their company structure like? Do they have a lot of cash? When you're investing in like specifically individual companies, that's some of the things that you should be looking at. And many people do not do that. They just kind of, say, oh, like I like Apple, and then just start investing in Apple, which is fair enough. But like, if in order for you to really truly understand what is going on and understand why you invested in Apple, those are the kind of things that you actually want to be looking at. What is my investment strategy? Very, very good question. So for me, I would say I'm probably like an 80% passive investor, 20% active. So the majority of my portfolio is through passive investing. So I do invest in funds. And again, you'll see that in my portfolio, majority of my portfolio is in funds. So I'm a very passive investor in that I don't, like, I get the funds, like I've researched the funds already, and then I just literally just let the investments do its thing. But about 20, just over 20%, I would say, I'm quite active. So I do have a number of individual companies that I also look at. And I have a small percentage that are growth and quite a large percentage that I would say are value, which basically means that they are kind of very strong companies. So they've performed very well in the past. They still continue to be like quite profitable. Some of them may give dividends. So what I mean by that is if a company has quite a lot of cash and they basically have so much cash that they don't really know what to do with it, some companies will decide to just reward their shareholders and just give them money in the form of dividends. So that's what it's called. So I invest in a couple of companies that are basically quite strong and stable. And so they're not really looking to like keep growing and keep growing. So that's why they will like give things like dividends. So they'll just like reward their shareholders. And so I invest in like a couple of companies that basically do that. So that's pretty much like my strategy. And how I got to that is, again, like I looked at my goals in terms of, like, for me, financial independence. The stock market was going to be part of the vehicle. It's not the only vehicle for me to reach financial independence, but it's partly the vehicle for me to do that. So that's kind of a why. And then my risk tolerance. So as I would say, I'm fairly cautious, but I'm also not that cautious at the same time, just because I'm still quite, I like to tell myself that I'm fairly young. So obviously I'm in my late 20s now. I can no longer say mid 20s, but I'm in my late 20s. So I still have quite a lot of time. And I also understand like how the stock market works. And so I know that like there's a lot of emotions that go into the stock market. So for me, I like feel like I can afford to take some element of risk. So that's why I do have a bit of an active route, but majority of my portfolio is kind of like in the passive route as well. So yeah, in terms of like, and I will compare this to like my husband. Like my husband is definitely like a lot more active, I would say. He's definitely more active, but he also has a very, very high risk tolerance. Like his risk tolerance, sometimes I'm like, I can't no, like some of his investments I'm like, I would not have done that. Oh, but because he's like, he will pretty much take the risk and he doesn't mind. And like if like his investments dropped by whatever percent, because like his investments have, like some of his investments are very volatile, he doesn't mind, he doesn't bat an eyelid, because he has a very high tolerance to risk, whereas mine is a lot lower. So again, because we have different risk tolerances, like our investments are very different. Like if you put our portfolios together, they are very different, very different. But that's part of the life. Like again, that all depends on, we obviously still have the same goals in terms of like financial independence, but then our risk tolerance is so different. And so again, that impacts your strategy. So he's going to be he's a lot more active compared to me. So even though our goals are the same, our risk tolerance is different. And so that, again, is going to impact your strategy. And it's why I always stress that everyone's strategy is going to be different, because everyone has different goals and everyone has different attitudes to risk. So hopefully that gives you a good example in terms of how I've done it. Where did you find all that info, Veronica? Is it just by Googling the info, the company research? Yeah, I did a lot of reading. I did a lot of, I did a lot of Googling. I did a lot of reading. I also invested in network events as well. So I went out to talk to people who were investors because I wanted to understand it in a bit more detail. So that's something that I did. And it's obviously being aware that I took quite a long time because I was also paying off my debt at the same time. So because I had all of this time, like it took me 18 months to pay off my debt. I used that 18 months literally researching everything. And when it comes to like researching the companies as well, like I I had also done some like accounting modules as well, like as part of my work and stuff. So that also helped me. And actually, when I was working in the company, because I was now thinking about investing and I was thinking about investing in the stock market. My company that I worked for was a FTSE 100 company, and so I kind of almost used that as an example. So I was literally I'd be like looking through, like, because I had to help out with our annual reports as well. So I'd literally be looking through the annual report and being like, oh, okay, how much cash do we have? And like every time we'd have like the CEO would come and talk about meetings, I'd be like, so this is what it means. That makes sense. And I'd literally go and ask questions to people, like just just casually. I'd ask questions to people in my company because I wanted to understand. Like I really wanted to understand, like, okay, well, what does it mean that if we don't have debt, or what does it mean like when I'm looking at the cash flow statement, what does that mean? So I did all of that stuff, which can take quite a while, but obviously it depends on how much work you want to go into. Again, when it comes to individual companies, there's a lot more work that goes into it compared to funds. So like most of my clients, they don't actually invest in individual companies, they invest in funds, because you don't have to do like all of that research, because it does take quite a long time, and you also have to keep up with it as well. I can't just invest in Apple and then just leave Apple and be like, all right, I'm invested in it. I can't do that. I have to make sure that they are a company that I still want to continue to invest in over the long term. So I have to keep checking when it comes to their earning reports as well. Like how are they doing? Are they not making sales? Like, is their profit going down the drain? Has there been a change in management where the company is basically about to go kaput? You need to like keep updated. So that's why I don't tend to invest in that many individual companies as well, because honestly, I don't have the time to be looking at all of these companies. So you also need to take that into consideration as well. What's the difference between growth and value investment? So for me, basically, when it comes to growth, these are going to be like focused on companies that are really trying to grow now. And so a lot of what they'll be doing is they will be, whenever they actually do make money, and so if they do have any profits, they're going to reinvest it back in the company because they want to just keep growing. So for example, with companies like Uber, that would be considered like a growth company, because literally what they're trying to do is just reinvest any money they have back into the company so that they can keep growing. Whereas value investing, you may be looking for companies that maybe they still have like very strong fundamentals. So maybe they are like still profitable, maybe they're doing well, but for some reason, like their share price doesn't reflect the fundamentals of the company. And so what it means is that you basically see it as value. It's almost like you basically see it on sale. And so you decide, actually, this is still a strong company. I still think it can continue to do well in the future. So I'm going to invest in it, despite the fact that maybe the share price isn't reflected. So maybe it's not got like a huge share price at the moment. So that's kind of the difference. Oh, good. No, glad to know it's been fun. Yeah, this is actually my last weekly live, guys. Like, remember, this is actually my last one. So after this, there'll be no more. There will be monthly lives. So I usually do like once a month. Usually it's around the end of the month, or maybe it might be in the beginning of the month. But this is actually going to be my last weekly live. So really hope this has been useful. But yeah, so in terms of the differences, but again, there are so many different strategies as well. There's a lot of different strategies. So it's really thinking about, okay, well, what do you actually want? How much work do you want to put into it? That's what you want to think about. So for me, Yeah, those are kind of like the main questions. What would you focus on in the monthly lives? It really depends, actually. On very good question though. So before, it kind of used to just be focused on whatever questions you guys had. So if you had any specific questions about anything to do with personal finance, I basically answer it. However, going forward, what I might do is I might do like themed monthly lives. So I may do again like another investing one, maybe another saving one, another budgeting one. If that's what you guys want, like I could definitely do that. If not, it would just be like a normal kind of what's the word, like, Q&A type thing. You guys can just come and ask me questions because I'm happy to answer questions. I'm like, here, like, you guys, this is my last live and you guys aren't asking me quite, like, a lot of you guys aren't asking me questions, so I'm here. I'm literally, this basically kind of like free coaching. Just saying, just saying. So if you want, you can 100% ask me questions. But yeah, so in terms of like when you're investing in the stock market, like the only thing I would say is, of course, just like make sure you're very clear on things like your long-term goals. Specifically, if you're looking to invest in for the long term, then you just really want to be very clear on your long-term goals. And then it's going to make it a bit easier for you to now think about, okay, well, like, what's my attitude to risk like? And that's going to help you understand, okay, what things that I like now start to invest in. So with like most people, particularly as they're beginners, most people will invest in things like funds, because you don't have to do so much work when it gets when you go into like researching companies. And that's also another thing as well. If it was me, I would not be getting into so much analysis paralysis where I'm thinking I now have to do all of this research on companies that it stops me from investing. No, that should not stop you from investing. I didn't even start investing in individual companies. I actually invested in, oh, I think someone's paid me $10. Oh, well, thank you. This is the first time I've ever been paid. Thank you so much, Upsetter. Thank you so much. This is new. Gosh, well, thank you guys so much. This is amazing. I was not expecting that. I'm hoping this isn't fake. Hoping this isn't fake, but if it isn't, thank you so much. But yeah, what I was saying before, what I was saying is yeah, don't get so hung up on the fact that you now need to do so much research on companies, because I didn't get started with investing in companies. I actually got started with investing in funds, because you don't need to do as much research on funds. Like literally, you can start looking at funds, thinking about, okay, well, based on what I'm looking for, which fund is best for me? Because again, it's not just one individual company, it's a basket of different companies. And what that means is that, let's say if one company even went bankrupt, well, there's like a whole load of different companies in that basket, so it's less likely to like affect the whole fund basically. So that's why when it comes to not only risk, but also if you're only just starting in investing, if you're only just starting when it comes to investing, for me, I started off with funds. Once I was now comfortable with funds, I was like, okay, well, I've chosen my funds. That's literally just going to be something that I invest in all the time. Now that I have more confidence, and I've also started to now learn about companies a lot more, that is when I now started investing in individual companies. Because you also have to remember, the volatility is going to be very different. With individual companies, you're investing in one company. So if the company you invested in becomes bankrupt, you could lose all your money. That is a fact. You could lose all your money. I'm not going to lie to you guys. Like you could. So you have to be aware again of that risk. You need to be aware and say to yourself, am I willing to take that risk? Am I comfortable with taking that risk, knowing that if I invest in this company, I could lose my money there. And so again, think about your risk tolerance. That's why majority of my portfolio is not individual companies, because I know that I probably wouldn't like to take all of that risk based on my risk tolerance. So you have to be really mindful of that. But when it comes to funds, and when I'm talking about funds, you're going to come across things like index funds or ETFs. So if you're like doing your research, that's something that you'll probably come across. When you're thinking about those funds, it's going to be different. Like the level of risk is very different compared to individual. companies, because you're not just investing in the one company, you're investing in a whole load of different companies. It's like you go into the supermarket. Like I always tell my clients, it's like literally like you go into the supermarket. If you go into the supermarket and you go to like Asda or Walmart, what a fund will basically do is it will have different products like in your basket. Like you'll have different products in your basket. So even if you lose one product in the basket, you still have like, if you lost like 1 out of 10 products, you still got 9 products in your basket that you can basically buy. That's kind of how like you want to look at it. So yeah, what will be my dinner tonight? So very good questions. Yes, so wait, Elaine's just said yes, funds are the way to go for me personally. However, I did a couple of individual stocks for a few years now. Yeah, my risk tolerance is quite cautious. Yeah, and depending on what type of company you go for as well, that will also have an impact on your kind of risk tolerance as well. So it's always interesting. So in the last 10 minutes, I can talk about my dinner. So I've actually made a jerk salmon pasta. I made it yesterday, actually. So if you follow me on Instagram, then you know that I made this. Yeah, we did like a food shop on Friday, and I'm actually doing a video. Another grocery haul. I was gonna keep it quiet, but I am actually filming another grocery haul. So I basically filmed some of that, and I basically kind of like showed you guys what we bought with our food budget and like what we made. So I made a jerk salmon pasta, which we're gonna have today. I pretty much like batched that, so like that's gonna hopefully be like 2 or 3 meals for the week. And then I also made some chicken as well. We had that with roast potato yesterday. Again, I pretty much batched the chicken. Gonna have that for the rest of the week. And then also I made Yinka's lunch as well. So did a lot of cooking yesterday. So yeah, oh, it's nice to know that you love my grocery hauls. Yeah, like I sometimes I'm a little bit hesitant because I'm like, I'm not like a nutritionist, and I'm not like an amazing cook. Like I like to cook, but I wouldn't say I'm like a head chef or anything. So I always find it interesting that you guys like my videos. But no, it's nice to know. So that will be coming out soon. Can you explain what's VUSA on Trading 212? So VUSA is a Vanguard fund, and I don't know if they have. I've never actually invested in VUSA. I don't know whether it's because I know it will be a Vanguard fund, but I know there's the S&P 500, which is also like the top 500 top 500 US companies, which is by Vanguard. I'm pretty sure that the USA is also a Vanguard fund. Let me check for you, because I didn't actually know Trading 212 did that fund, because I'm pretty sure that they usually had it like a lot of them. Hold on. Yes, yeah, VSA. Yeah, it is. I was right. It's the S&P 500. So it's the S&P 500 ETF. I was thinking, like, I'm sure I know that. So basically, top 500 companies in the US. It will basically track that performance. So it will track that index. And that's essentially what it is. So I hope that makes sense. And when I'm talking about like top 500 companies, like some of those companies are literally like your Apples, Microsoft, Google's, like your big companies, your big bucks. It's quite similar to like if you're in the UK, kind of similar to your FTSE 100. So like your top 100 companies in the UK. Similar to that, yeah. So some people do invest, like to invest in that fund. Some people like to invest in more. So it's something that's a bit more global. So again, depends on what you like. It depends on whether you see the US actually, doing very well in the future in terms of the long term. Those are kind of questions you may want to think about asking yourself if you're considering investing in them. Again, can't give financial advice, but that's something that I would probably be questioning as well if you wanted to think about that. So hopefully that makes sense. Any other questions before I go for dinner? Glad this was very useful. I'm just trying to make sure I got on my notes when it comes to investing. But like I will definitely say that investing can either be very complicated or it can be quite simple. A lot of people like to make it very complicated and they use all these nonsense terms, and I think it's absolute rubbish, to be honest. Like literally you want to start thinking, like it can be very, very simple. Like if you really wanted to, like if you know your goals, and knowing your goals is, to be honest, for me it was knowing my goals and my risk tolerance, which was probably more of the difficult bit, so that I could be sure, okay, well, this is the kind of thing that I want to invest in. That's probably more difficult bit, because with investing, you could, if you really wanted to, you could literally just pick a fund that is based on your goals and your risk tolerance, and that is your strategy. You just pick a fund and you just keep investing in that. A lot of people do that. They literally just have one fund and they invest through that, and that's it. That's all they want to do. So it can be very easy if you want it to be. Like I think people, when we start talking about the terminologies, like maybe when we're talking about like, oh yeah, I'm a shareholder, or an ETF versus an index fund, that can be a little daunting at first. But actually, once you understand, like again, how I explain it is pretty much like it's a basket of companies. That is literally how I explain it. I explain it with like, the analogies I use is literally using supermarkets. That is how I explain it to my clients. I'm like, if you're going Tesco, like this is what a fund is going to look like. This is what an individual company is going to look like. I literally use those examples because I want to make sure that you guys understand it fully, and you're not so hung up on the jargon which stops you from investing, because that shouldn't stop you from investing. Like most people, once they understand like the concepts and they understand, the terminology and things like that, it becomes a lot easier for them to invest. And once they've chosen the investments, like depending on what you choose, but for a lot of people, if they go through the passive route and they just literally choose like an index fund or ETF, that's it. That's all you need to do. They just set up a direct debit and then their money is just invested every month. Maybe they'll look at it like once every quarter, but then that's it. Don't need to do much work with that. That's all they do. They carry on with their lives and focus on other things that they they want to think about. So yeah, again, it really depends on how active you want to be, and yeah, how much you wanna do, how much stuff you want to do. But if you're the type of person, which most of my clients, they're not that interested. Like some of them do have a bit of an interest, so some of them will think about investing in companies later on, but a lot of them don't. A lot of them just want to just start investing. So once they've picked out what they want, that's it. Set your money and go. Yeah, and focus on something else. So yeah, that's why, like, when people have been crying about the stock market, I'm literally, I didn't even realize, because I was like, I I I just invest. Like it's just part of where my money goes. I don't tend to look at my investments that often. When I first started, I think I did look at my investments quite a lot. But now I don't really look at it unless I know that maybe there's like an earnings report coming up, so I need to like be, looking at like what the company's doing. Like unless it's that, but like for my passive investments, I hardly look at them. I hardly look at them. The only time that I will probably look at them is mainly when I'm going to start like put money into it and like think about, okay, well, what fund am I going to be investing in? Because I like to just do it physically. Like I don't have a direct debit because I do the same thing with my savings. I'm just weird. I may not be weird though. I may not be weird. I may be like other people who like to move money. Like I know some of you guys like to move money. So yeah, but like I just like doing that. But if I really had the choice, I could just set up a direct debit and then just say this amount is going to come out every month, and then that's it. So yeah. So hopefully that makes sense. Any other questions before I leave you? This is my last live, guys. It's been amazing. Like if and also if you guys if any of you actually need one-to-one coaching with this as well, that's something that I cover. So I will put the link in the chat, just in case like you really do want to get started investing and maybe some of these things seem overwhelming. I will put a link in the chat. But guys, the last live, thank you. But if you've been here for every week, like hats off to you. Hats off to you. If you've been with me, if you stuck with me for every week. I mean, I've been doing this for 5 weeks in a row. I have never done this before. Never, ever. So I've absolutely loved it. I've had so much fun, like especially getting to know you guys. It has been a little bit tiring though, so I'm gonna have to say that like the weekly lives will unfortunately be no more. However, what I will go back to is our monthly live. So I will of course let you know, like in my group not in my group, in my community tab whenever I'm going to be doing my lives in the future, so that you guys can make sure you join. Usually it's on Sundays, maybe like once in a while it might be on a Monday, but usually it is on Sundays. So yeah, I really hope you guys have enjoyed these lives. I've definitely had fun. It's been amazing, and it's been so nice getting to know all of you. It's just been great. So hopefully I will get to know some of you on Instagram if you follow me on Instagram. So especially if you're very interested in like my food budget, I follow that. I do a lot more on Instagram, because I basically will sometimes, like a lot of times I will like show you guys when we actually go and do our food budget, and I'll show you like what we bought and how much we paid for the week and stuff. So definitely follow me on Instagram if you haven't. It's literally my name, like same as my YouTube name, Veronia Spain, at Veronia Spain. That is my name. So yeah. Yes, no, so good to hear that it's been useful. Well, thank you guys so much. I'm going to leave it there. I hope you have an amazing evening. We're going to have our jerk salmon pasta now today, and on Tuesday I do have a budget update for February as well, so make sure you do check that out as well. And I do also do videos on Fridays as well, and I have a lot of free resources in my description as well. As lot of I've got like a free trading, I've got a free money management guide as well, whole load of different things as well, so make sure you do check out the description too. But yeah, thank you guys so much for joining me, and I hope you have a nice evening. I will see you next month. See you later. Bye.